Hello and welcome to Bloomberg Quint's live coverage of the second monetary policy of the RBI this financial year. I'm Alex Matthew and with me in the studio is Vishwanath Nair and Agam Vakil. Now there's a lot to talk about this monetary policy. What's the RBI going to do with regard to the policy rates? But more importantly, what's the outlook on inflation? What's the outlook on GDP? And as well as that, what is the outlook on systemic liquidity? Let's jump straight to our colleague Ira Dugal, who's standing by at the RBI to give us a sense as to what is expected. Ira, over to you.
Two 2017 may end up being a year where predictable policies turned unpredictable and seemingly unpredictable policies end up being completely predictable. Let me explain what I mean. We're standing here awaiting the next monetary policy review from the Monetary Policy Committee today, and the outcome is supposed to be fairly predictable. Most economists are expecting that the Reserve Bank of India will keep the repo rate unchanged at 6.25%. They'll also hold on to their neutral stance on monetary policy. They may, however, adjust their tone a little bit and try and sound a little bit softer on inflation, because inflation numbers have come in below what the RBI had expected, and growth numbers have also softened a little bit more than what the RBI had suggested. But the unpredictable part of all of this is the backdrop. There are too many unanswered questions which the RBI needs to try and answer. One is, are we actually overestimating inflation? Remember, this time around, they've seen a couple of surprising developments. Firstly, food inflation has stayed in check, even though summer months tend to see a spike in food prices. That hasn't happened, leading to the question whether food disinflation is more structural in nature than earlier assumed. If so, what are the implications for headline inflation? Could we meet the RBI's 4% medium-term target a little bit sooner than earlier expected? And if so, that would leave room for the RBI perhaps to cut rates one last time in August. That's what some people in the market seem to believe. Equally unpredictable is the growth scenario. The latest round of growth data that we received suggested that growth in the economy had started to slow all the way from the start of fiscal 2017, and demonetization took it down another notch. How quickly does it rebound for demonetization, and what level does it stabilize at? Those are some of the growth questions, and all of that will be crucial inputs into how the RBI guides on its monetary policy. Remember, from the start of this year, we've had a series of surprises, or at least the market has had a series of surprises. First, in the February policy, the RBI abruptly changed its stance from accommodative to neutral. Then in the April policy, they hiked the reverse repo rate to try and ensure that easy liquidity conditions don't pull down market rates well below policy rates. So the market is actually bracing for more surprises, even though the headline outcome is supposed to be fairly predictable in terms of no rate cut from the Reserve Bank of India.
So whether or not this is a predictable monetary policy decision or not, we'll find out in a few minutes' time. But Vishy, apart from the commentary which everyone is going to be watching very closely, is there likely to be something on the banking side with regard to NPA resolution?
Right, thanks so much, Alex. And it's an important point that you point out here. See, over the last 1 month, we have seen a number of action points that have happened coming in from the government as well as the RBI around NPA resolution. It started with the 5th May announcement from the government, an ordinance where they changed the Banking Regulation Act and tried and introduced newer things and allowing the RBI to direct banks on how to go about resolution. The RBI post that has had meetings with a number of stakeholders, including banks, to discuss what they can do and they cannot do in terms of NPA resolution. So how this plan is going to pan out, what the RBI's commentary on the NPA problem in the banking sector, about 10 trillion rupees worth of stressed assets in banks at this point in time. So how the RBI views this and how the RBI will look at wrapping this up will be something that is important and something the RBI should probably comment on. Right, Alex, why don't you take them through what's happening with the markets maybe?
Absolutely. Agam, in fact, I was going straight to you. What's essentially been the buzz in the market? Has there been anything yet in the stock market? What the numbers telling you?
So, when it comes to the Nifty and the way that's panned out over the past couple of weeks, considering we've had updates from the monsoons, a lot of other macros coming in, we're looking at the Nifty more or less standing around 9,600, and today has been another very, very quiet day of trade. So as you can see here on the intraday graph, it's more or less flat right now. We're hardly looking at any change whatsoever, but of course this is typical for sort of the Nifty to behave moments before the RBI policy is announced. When it comes to the Bank Nifty, however, we are looking at some amount of strength today. Let me just take you through the intraday graph for the Bank Nifty. And as you can see, we're looking at some gains, but well, I'd say that it's been largely range bound. Again, when it comes to volatility too, it's been very, very quiet. And well, what we have in the RBI policy will determine how these markets move from here on.
Let's actually jump straight to the government bond market.
Right.
If you can pull up the intraday chart for the government bond 10-year benchmark,
Right.
We'll essentially talk about how it's moved during the day. But if you actually look at the movement over the past month and even a little bit before that, when the new benchmark for this financial year was introduced, the only major movement happened when the new benchmark was introduced.
Right.
After that, it's pretty much been stable.
Right,
Now,
so this is the 1 month that you're talking about.
Yes.
We've seen a fall in
this
your
was
yields.
when that fall happened, when the new benchmark was introduced, and then more or less it's been stable around that 6.6, 6.7 mark. Right now it's hovering at around 6.64% for the 10-year benchmark. Let's also look at the rupee right now, and actually that's something that has been very interesting over the past few months, Agam.
It has, yes.
Because of the kind of FII inflows that we've seen. But
Yes.
as of today, it's more or less been range bound around that 64.39 mark. It hasn't really moved too much even over the past month. It's been more or less rock steady if you
Right.
compare it with the kind of volatility that it saw, say, about 2 years back.
Yes, so you know, as far as the rupee is concerned, if you compare it to the levels that we were looking at, this is the last RBI policy, it stood around 65, currently at around 64.4. What's changed and what we've seen since the last RBI policy is an inflow from FIIs worth $8.6 billion, but a majority of this is coming in the debt market. We just had about $1.7 odd billion coming in the equities, with a larger portion coming in the debt markets. But if you take $8.6 billion for this period this year and compare it to the previous year had just about $2 billion coming in.
And
So
that's very interesting, Agam. And
Right.
I was speaking to a treasury head a little while back,
Yes.
and what he was saying is that this is on account of a carry trade, essentially because the dollar index is weakening.
Yes.
Investors in that market are looking to put money into the emerging markets.
Right.
But it's also important to point out that the domestic institutions here have a lot of liquidity as of now, particularly the banks. And I want to
Yes.
go to you, Vishy, on that point. It's interesting that a lot of the liquidity that came in after demonetization hasn't really left the system. So there's a new normal, so to speak.
That's right. I mean, even though most of the banks haven't really announced how much they're holding back on liquidity after the demonetization phase got over, last month Arundhati Bhattacharya, the chairman of State Bank of India, had pointed out about 65% of the currency that came into the bank after demonetization has still stuck around with the bank. So that is a massive amount of liquidity that's there with the country's biggest bond.
Unchanged. Is it unchanged? All right, so we're coming in with a live
Right.
update from the newsroom.
Right.
In fact, and while we wait for the press release. So we're just waiting for a confirmation here. It seems that there has been no cut in the policy rate. It has remained stable. Vishy, this is essentially what was predicted.
Yes.
And while we wait for that policy document to come to us, a lot of people were expecting a pause.
That's right. So if you look at the poll that we conducted at Bloomberg Quint, about 10 economists from various banks, foreign as well as domestic, they've all pointed out that the RBI is likely to hold the interest rates. It seems there seems to be some kind of a surprise coming in from the RBI, but the RBI was widely expected to hold the rates because it doesn't make sense to move right now, considering there is not enough macroeconomic data to support a rate cut or a rate hike for that matter, considering the RBI is at a neutral stance, so it could go either way. If you look at the inflation numbers and the growth numbers, there's been a significant drop in both.
Yes.
So a hike is probably out of the question at this
And
point.
it's interesting,
Yeah.
Ira was pointing that out as
Exactly.
well with regard to the importance of the commentary of the RBI with regard to both inflation and growth. The fact that the numbers for inflation have come in way below the estimation
Exactly.
of the RBI. Is it something
Exactly.
structural that's changing?
Probably, because if you see, the RBI was looking at about 4.5% for the first half of this financial year,
Yes.
as well as a 4.5 to 5% for the second half. But if you look at the inflation number, the CPI inflation is coming in about 2.99, which is
Yes.
significantly lower than what the RBI had originally thought of. So how this would pan out, whether this is something that is sustainable, whether there is a structural change in the way inflation is looked at in this country, maybe that could throw some light on
Yes.
what happens next.
In fact, I'm actually going to try and let's try and pull up the policy document here. And while that happens, let's actually talk about what's happening in the market. Why don't you take that side, Arvind?
Right, yes. Well, you know what? The fact that there was no expectation on movement in the rates has been very well priced in the markets. As you can see, as far as the Nifty is concerned, there was a little bit of a volatility when the news came out, but for now it's stabilized very flat for now, and it's the same for the Indian rupee as well, and for that matter the 10-year bond. So on an intraday graph, as you can see, this is the Nifty here. Well, some gyrations here and well, more or less flat. Let's also take a look at some of the big movers for now, and I'm going to bring you there. We have some gains in Aurobindo Pharma, Vedanta and Sun Pharma, HUL. None of these figure in the interest rate sensitive space. Again, with respect to losers, we have some weakness in the IT stocks, but in fact interest rate sensitive stocks are actually absent in this list, as you can see. So not too much to speak for, at least as far as the equity markets are concerned.
So we've actually got a physical print of the monetary policy document. What does the first 3 paragraphs tell you?
Just primarily this, that the RBI is holding its repo rate, the key signaling rate, at about 6.25, which is where it was all this while also maintaining the reverse repo at 6%, something that they had done in the last policy. If you remember, they increased the reverse repo rate by 25 basis points. The MSF, or the marginal standing facility, and the bank rate at about 6.5%, and that all of that stays exactly the same. Now what they're saying here, of course, is that the decision of the MPC, the Monetary Policy Committee, is consistent with a neutral stance of the monetary policy in consonance with the objective of achieving the medium-term target for consumer price inflation. So what they're saying is that the RBI has stuck to its original inflation target, about 4%, with plus or 2 minus, depending on how macroeconomic conditions develop. But considering that, the MPC has voted on maintaining a neutral stance as well as continuing with the repo rate at about 6.25.
There are a few flashes that are coming in from that policy document.
Right.
Obviously, a lot of people are working on it as we are speaking right now. There's this particular flash, Vishy, on headline inflation. It is projected in the range of 2 to 3.5% in the first half of the year and 3.5 to 4.5% in the second half of the year. And this one statement that's coming in, it says the abrupt and significant retreat of inflation in April from the firming trajectory that was developing in February and March has raised several issues that have to be factored in to the inflation projection.
Exactly.
So it's interesting.
Exactly, something that we were pointing out earlier as well, right? Because food inflation, if you remember what Ira said about food inflation, it hasn't really firmed up as it would usually do in the summer months.
Yes.
So there is something structurally that is changing with inflation, and probably the RBI wants to know more about it, learn more about what has changed in terms of inflation, and whether this would impact the way they look at inflation for the rest of the year, and whether their assessment has to change accordingly.
So there are a couple of points that were being raised by market participants about the fact that there's a little bit of stability with regard to the rains coming in on time.
That's right.
Obviously the RBI would wait for dispersion and the distribution figures to come in, but at least there's not too much fear on that regard.
Right. The monsoon has been predicted to be normal throughout the year, so maybe that could give a lot more comfort.
Right. So I'm going to hand this straight to you.
Sure.
The other factor here is that crude has been below the $50 mark, so there's comfort there as well.
Yes.
The only unpredictable factors right now are GST, 7th pay commission, HRA.
That's right.
So those are factors. Perhaps
those are factors. But then, of course, an important move by the RBI here, where they've cut the SLR by about 50 basis points to 20%. If you remember, the SLR is the statutory liquidity ratio. It's a mandatory ratio which banks have to maintain in terms of interest rate, in terms of government securities that they have to hold on their books compulsorily. Now, we all know that the RBI mandates this at about 20.5% before this. Now it's being reduced to 20%. Banks normally keep headroom there because from 20.5 they would largely maintain about 23-24% big headroom, so that they can sell the securities as and when they need the liquidity into their books. So considering the SLRs being reduced, it's a good thing for the banks, right? Because they don't have to hold as much liquidity.
Exactly, and hopefully there's also going to be some commentary on lending.
That's
because invariably that freeing up of SLR
Yes.
should ideally be funneled back into the into the economy.
That's an interesting point, Alex, because if you see the credit growth numbers throughout the last year has been quite limited, even though banks were flush with liquidity thanks to demonetization, thanks to other issues coming in, the credit growth being low primarily at about 5% throughout the year. It's a multi-year low, about 20-year low,
Yes.
if you remember. So how this excess liquidity is going to play out and how much more liquidity banks will have to lend further, probably reduce the interest rates further, this could point to that, whether banks should consider maybe reducing their interest rates.
Absolutely. I'm going to actually hand this over to
Sure.
you, and in the meanwhile I want to talk about a couple of points here. These are statements coming in from the Monetary Policy Review statement. The implementation of the GST is not expected to have material impact on overall inflation. That's an
Yes.
important statement coming in from the RBI in
That's
terms
right.
of the outlook and the implementation of GST. So let's actually move to those
Yes,
flashes from the...
interesting, very interesting point here with the MPC. See, the MPC has been deciding on policies for a while now, but mostly all 6 members of the MPC have been voting for the same resolution so far.
Yes.
They've been unanimous in their decision, but this policy, that has changed. Clearly, only 5 of the MPC members voted for a pause on the repo rate, while one of them, Ravindra Dholakia especially, has voted not in favor of the decision. He probably wanted the interest rates to go down. If you remember the last policy, the MPC minutes that came out of 15 days after the policy, it clearly pointed out that Ravindra Dholakia was pointing at a reduction in inflation concerns, and therefore he was saying that probably there is a reason for a rate cut. He was talking about it then. Now, with the WPI and the CPI decelerating so much, he is now digging into his heels. He's probably saying that no, we don't need a pause right now, we need a cut.
And it'll be very interesting to wait for that MPC minutes to come out 15 days hence to find out whether or not that tone has changed, because a lot of people viewed the previous policy, the tone, as extremely hawkish. With one member even pointing towards the possibility of a rate hike. So let's actually go to Agam here. Agam,
just picking up some pointers when it comes to the RBI's viewpoint on what the manufacturing sector and the services sector has done. So as far as the industrial outlook is concerned, they say that there is some optimism in the manufacturing sector, specifically in the second quarter of this financial year, and it's been driven by rising demand, especially in the rural areas, exports and profit margins. Services sector, however, the outlook is a little more mixed. So when it comes to the high frequency real indicators in services sector, we're looking at a mixed performance in April. And when it comes to the transportation subsector, freight carriage by air and railway, as well as momentum, there has been a little bit of momentum, but it's not been up to the expectations. So that's where we are looking at some concerns building in. Of course, services now comprises a substantially larger portion as compared to what it was a few years ago. So things have changed, but for now, at least as far as the manufacturing sector is concerned, the outlook is positive for now.
Let's actually look at the market, Agam.
Well, you know what, as far as the rupee is concerned, it's actually strengthened further. But when it comes to the markets, we really haven't seen too much change. If I were to look at the Nifty intraday graph, as I pointed out earlier, it remains exactly where it is with little to no gains whatsoever. And as far as your government bonds go, let me just pull that out and see whether or not there has been any change in the yield whatsoever. And as far as this intraday graph is concerned, there you go. We've had a little bit of a movement, but well, it's back to where it was. Currently standing at 6.63. So
which is just almost as where it was before the policy announcement. There's a very important point coming in on growth projections for the year. I'm going to toss it to Vishy to take you through that.
Yeah, so the RBI has clearly reduced its growth projection, GVA, the gross value added growth that the RBI looks at. It doesn't look at GDP as an indicator of growth. They have reduced it to about 7.3%, which earlier 7.4% in their earlier assessment. That has come down. Now, we know that they have already reduced the inflation estimate. They have also reduced the GVA growth estimate. So the RBI is clearly seeing a sort of a balance between the growth and the inflation numbers at this point, and is seeing a low growth, low inflation sort of scenario.
Yeah.
So maybe this is sort of building in for a rate cut in the August policy. I mean, the economists are not ruling it out.
Yes.
If you remember that the economists that we talked to for our
Yes.
poll, some of them did mention that maybe August is the time when the RBI may consider another rate cut. I want to bring you again to Mr. Ravindra Dholakia and the statement that he's made.
Yes.
It's mentioned here in the RBI press release. It says, noting that inflation has fallen below 4% only since November 2016, the MPC remains focused on its commitment to keeping headline inflation close to 4% on a durable basis, keeping in mind the output gaps at the RBI. However, Ravindra Dholakia has said that maybe this is a little bit too hawkish. Maybe consider reducing the interest rates.
Very interesting. So, economists said if at all there's a rate cut or a rate decision, in all probability they're going to wait for the monsoons to pan out, the implementation of the GST. At least two moving parts will be settled then. The 7th Pay Commission implementation, all of those things will sort of resolve around the August time, and that's around the time when the RBI will take its next decision on the rates. So additionally, the Treasury head that I was speaking to said that the most bullish bond dealers in the market are actually anticipating a 25 basis point cut in the repo rate, but most others are actually setting up for a protracted pause. So we'll have to see how that pans out. At least as of now, we know that perhaps for some of the members of the MPC, the tone might just be changing from extremely hawkish to perhaps a little less hawkish, and that's something that was anticipated, wasn't it?
That's right, Alex. And also let's look at some of the non-monetary policy related points that the RBI is raising. The RBI has rationalized the risk weightage on housing loans, something that the banks had been clamoring for. It's set about the standard asset provisioning is at about 0.25%. This will obviously give a lot of fillip to the housing loan market, because as you know, the affordable housing market is something that banks have been focusing on, as well as NBFCs. It's a government project, and obviously there's a much needed push in that direction. So with the standard asset provisioning coming down, maybe the banks would like to lend more towards that.
In fact, Vishy, very recently there have been a spate of reductions in the interest rates in that one segment.
Exactly.
A lot of banks are looking at the retail segment, that's for sure. PSU banks, the larger ones, and especially in the housing segment, with SBI even in its annual report pointing out that housing is going to be the driver for growth in the retail segment.
Exactly.
So
you're right, and of course another point that the RBI mentions is about masala bonds. If you remember, these are securities that have caught a lot of fancy among international investors.
These, by the way, are bonds that are issued by domestic issuers, but that are priced in rupee and not in foreign currency.
Exactly.
But they are invested in by foreign entities. So they're floated in exchanges outside India, say the London Stock Exchange or in Singapore, and global investors have the opportunity to invest in Indian debt, but they have to bear the risk of currency.
Exactly.
So it's good for the issuers.
Good for the issuers, and of course the investors build in that kind of risk. The RBI says here that any issue over $50 million would have a minimum maturity period of 3 years.
Minimum maturity for
up
masala bonds
to 50 million is 3 years, and anything over 50 million would be about 5 years.
Yes.
So that's something interesting. All-in cost ceiling for masala bonds,
300 basis
points over
above
the government bonds.
Yes.
So that the RBI set a ceiling on that as well. So maybe the high interest rates that were coming in through that security, maybe that would be limited.
So we have to actually find out from a few issuers, perhaps a few market participants,
how this would affect
the issuances, because it's true that a few issuers like HDFC have been tapping the masala bond market, and in that sense the yield in the masala bond market has been tightening. So they're getting better yields. But it's interesting to note that if some of the lower rated corporates want to raise bonds in the masala bond market, whether or not they'll be able to raise, because obviously the range or the gap between the government bond and their own yield will be significantly more than what HDFC has to offer.
Exactly. And of course, the RBI is also mentioning that if there is a masala bond that needs to be raised going ahead, then the RBI's foreign exchange department is going to vet every single application that goes. This is something interesting, because so far that wasn't the case. The RBI's foreign exchange department wasn't involved in these issuances, but now they're going to look at every application before it goes out. So that's another added level of checks.
Yes.
So I don't know. I mean, how this would impact the issuances going ahead is something that we need to maybe watch and talk to more people about.
Absolutely. This is just what we're picking up from the policy document. A lot more. All right. So news coming in. We're going straight to the press conference by Urjit Patel.
Combination of new factors are at work. One, the transitory effects that have kept inflation low since November could be lingering on. And two, there are supply glut conditions in respect of pulses, cereal, and vegetables, which may have set in before demonetization. It is difficult to segregate these factors, gauge how they will persist, and the manner in which they will impact the future path of inflation. With so many moving parts and the outlook clouded with uncertainty, the MPC decided by a vote of 5-1 to stay on hold and wait for greater clarity to emerge with incoming data. At the same time, the MPC was also cognizant of several earlier enunciated risks to the medium term: rising rural wages, robust consumption demand, the imminent implementation of the 7th Pay Commission's award on HRA, and the acceptance of these by state governments, and global risks materializing in the form of imported inflation. Under these conditions, the MPC decided to persevere with a neutral stance and maintain status quo with regard to the policy rate. As the government and the Reserve Bank embark on resolving the twin debt overhang problems, we felt that more targeted interventions that can unfreeze credit to help the stress-free but recently slowing sectors of the economy borrow at better terms are likely to work better. I'll now request Dr. Acharya to make his opening statement. Thank you.
Thank you, Governor. Good afternoon, everyone. Interest rate policy works well when it is transmitted seamlessly by financial institutions and markets to the real economy. Absent efficient transmission, changes in interest rate policy go waste and potentially have unintended consequences. Investment slowdown that has taken hold of the economy at least since Q1 of 16-17 is deeply rooted in the structural debt overhang problem of a number of our industrial sectors. Their excessive debt is saddled on our bank balance sheets. The accommodative policy of 2015 and 16 failed to revive investment as it did not get fully transmitted by the stressed banks to the indebted sectors. The Reserve Bank, in partnership with the government, has embarked on resolving this stress in a decisive manner. In the meantime, as Governor pointed out, what is likely to work better than interest rate policy in responding to growth challenges is a targeted intervention to create greater lending capacity for the healthier sectors of the economy that have recently slowed down. DG Vishwanathan will introduce next such a targeted growth-enabling intervention, as well as lay out the steps being undertaken on the resolution front. Let me finish by saying that the last month headline inflation print and revised growth estimates have certainly raised difficult policy questions. We will watch carefully in next few months the incoming data on inflation as well as the indicators of real economic activity. I expect that we will remain adequately state contingent, and if data so warrant, then act for a broader accommodation through the interest rate policy. Let me hand over to DG Vishwanathan.
Thank you, Dr. Acharya. We observed that delinquency is generally among the lowest in the home loan segment. In the past, home loan portfolio of banks has also responded well to targeted countercyclical measures taken on the segment. In view of this, and also having regard to the forward and backward linkages that an increase in the home loan segment can give rise to, it has been decided to reduce the risk weight on certain categories of home loans and also the standard asset provisioning. These changes, of course, are effective prospectively. We have also reduced the SLR by 50 basis points as a part of the transition to the 100% LCR by Jan 2019, but in the interim, it will provide some liquidity to banks, and possibly these two measures together should bring some buoyancy to the home loan segment. On the stressed asset resolution front, here's a brief update on what happened after the press release that we issued on the steps outlining the measures that we intend to take. The first meeting of the Internal Advisory Committee is going to be convened very shortly. The proposal to bring in the overseeing committee under the aegis of the RBI and with an expanded remit has also been approved in principle, so that will come out soon. We have decided to focus on a few large stressed accounts under this framework, and accordingly a set of accounts have been identified based on objective criteria. The decision on specific accounts out of these to be referred to IBC or to be restructured will be taken under the guidance provided by the Internal Advisory Committee. We have held a series of meetings with the stakeholders like IBBI, the banks, rating agencies, ARCs, the PE firms, investors, etc. And the required modifications to the restructuring guidelines are under works, and the feedback received from these stakeholders are being built into the final outcome that will come into it. Overall, what I want to say is that the RBI has a strategy to deal with the resolution of the large assets, and we are working in a calibrated manner, and we hope to see certain actions coming soon. Thank you.
Good afternoon. I just want to briefly touch upon the PCA framework. And as you are aware that some time back we had revised the PCA framework, and after that some banks have been put under this revised framework. The revised framework is essentially intended to pick up the early warning signals of concern in these banks and put a structure so that they can be restored to their financial health as early as possible. Having said that, you must have seen that in last couple of weeks, there had been a kind of misinformed campaign in some part of media, more particularly in the social media, about giving the impression that depositors' funds are at risk and they should be withdrawn. Surprisingly, some of these campaigns were probably, it appears from this, they were released by the seller of the rival products and all that. And following that, we had issued a press release. The purpose I am mentioning, actually my purpose of speaking today is to compliment that most of you covered our press release very quickly and quite adequately. However, some of you have chosen to completely give it a miss. There was never even a mention, and my point of speaking today, I think, is an important cause, is an important social cause which we have to deliver, and RBI really consider all of you as a very important partner in such communication. So my only appeal is, in future, whenever there is such opportunity, I hope it will be 100% endorsement and not the 95 or 90%. Thank you very much.
Thank you, sir. You would recall that the rupee-denominated bond in overseas jurisdictions by the Indian corporates, which goes by the name quote-unquote masala bond, was enabled by the Reserve Bank of India on 29 September of 2015. And this is in operation for quite some time, and the framework was not changed, and it has gained some traction also. So now we have decided that it should be brought in harmony with the ECB guidelines, and certain qualitative parameters that are applicable to the ECB guidelines will now be applicable to the framework governing the masala bond issuance also. Primarily three important ones relating to the maturity period, the all-in cost ceiling, and the recognized investors. These are the three parameters under which it has been harmonized at present. So this is one major development. Thank you.
Thank you. We'll now take a few questions. Let me start with the Hindu.
Thank you. Governor, it has been reported by the media that the Finance Ministry has called for meetings with the MPC members. Does it not curb RBI's independence and damage the credibility of MPC?
The meeting did not take place. All the MPC members declined the request of the Finance Ministry for that meeting. ABN News? ABP News, sorry.
सर इधर सर मेरा सवाल ये है कि कर्ज माफ़ी को लेकर के जो मामला है वो उत्तर प्रदेश से अब फैलता फैलता महाराष्ट्र और मध्य प्रदेश तक पहुंच गया है। इसका असर एमपीसी पे क्या पड़ेगा, मॉनेटरी पॉलिसी फ्रेमवर्क पे, और क्या राज्यों की माली हालत ऐसी है कि वो इस तरह के कर्ज माफ़ी का बोझ उठा सकें?
The MPC resolution says that the risk of fiscal slippages, which by and large can entail inflationary spillovers, has risen with the announcements of the large farm loan waivers. There is a risk that unless there is existing fiscal space in state government budgets or some space is found, the likelihood of going down this slippery path and dissipating the important gains that we have made in fiscal rectitude over the last 2-3 years can come about. Past episodes in our country has shown that when there are significant fiscal slippages, they do permeate through to inflation sooner or later. So it's a path that we need to tread very carefully and before it gets out of hand. Thank you. Next question. Z Business.
Yes, sir. Thank you, sir. This is Manoj Dara from Z Business. The pronounced slowdown in GDP growth in Q4 FY17 in CSO's new data has been partly attributed to demonetization. What's your view on that, sir?
The new data released by the CSO needs to be analyzed carefully before reaching strong or conclusions with certitude. Remember that these data incorporate the new indices of industrial production and wholesale prices, which are then used, the latter is used as a deflator, and in that sense present a much better picture of the economy than the old series. That data shows that a slowdown in economic activity set in during the first quarter of 2016-17, well ahead of demonetization. The data also show that agriculture and mining and quarrying, two areas which are high cash intensive, are not affected by demonetization. Rural wage growth again has remained elevated, especially compared to agricultural labor inflation. Manufacturing, as reflected in corporate sales growth and the IIP, electricity and other utilities and trade, hotels, transport and communications have been resilient in the second half of 2016-17. Construction and real estate have been affected, but in some ways this was predictable since the attack on black money would almost by definition affect these sectors given the circumstances under which they operate. Turning to GDP, private consumption actually accelerated in Q3 when the demonetization was the most intense, and then remained resilient in Q4. What is important to note in the CSO's data is that the slowdown in GDP is mainly due to deceleration in gross fixed capital formation during quarters 1 to 3, and then a contraction in Q4. This suggests that there are more fundamental factors at work that public policy should address urgently to rekindle the animal spirits and reinvigorate entrepreneurship and business optimism. I'll stop that. ET now.
Thank you very much, sir. It seems to be my lucky day today. I will ask you on the inflation part. It takes a very bold and a transparent central bank to reduce its targets like you have. So, congratulations. I think there's an acceptance in the government on that as well. But are you being overly cautious here, or are you preparing ground for perhaps monetary easing in August? And are you personally disappointed that a meeting was sought for the MPC members by North Bloc?
As Governor mentioned, the inflation outcomes really reflect a combination of factors which are very difficult to disentangle at this stage, just with one data point. So I think the MPC took a conscious view that we will look at more data. Because what we are seeing is that there are these transitory factors which, like fire sales of perishables and all that, but more importantly, since July, we are seeing that supply side factors have come into play, especially pulses, cereals and vegetables, which could be longer lasting than these transient factors. So we need to really unravel these effects and then take policy action, not act in a state where the outlook is very, very blurred. That's what I think Governor meant to say.
Mint.
So thank you. You said that the spending will now depend on the kind of the pace at which the remonetization will happen. Could you tell us to what extent the remonetization has happened? Because still we continue to hear from bankers that the cash is still not available in rural areas. So could you tell us, because data is still not available, there has been reluctance on the part of central bank to come out with data on the pace of remonetization.
Mr. Kanungu, you want to?
No, in fact, the data of remonetization, there is no, it is in public domain. And if you look at the data of our NIC figure, the 82.6% of the pre-NIC data, on pre-December, November 8th data, 82.6% of the economy has been remonetized, which is a large number. And if you look at the volume, in volume terms, it is 108% of the figure as on that day. So it will not be true to say that there is shortage of economy. Yes, there could be shortage of economy in some pockets, but whenever such things come to our notice, we respond immediately through various means by interchest remittances, and several measures have been taken in this regard. So I'll not agree to the view that there is cash shortage on a longer term basis or persistent basis at any place. It could be very well for a day or two. And the ATM shortages, our analysis is most of the ATMs in a place, if there are 7 ATMs or 10 ATMs, some of the ATMs do work, and that has always been the case before demonetization also.
CNBC.
Thank you, sir. I'm drawing your attention to two phrases. In para 14, you say, if the configuration evident in April are sustained, then absent policy intervention, headline inflation will be 2 to 3.5. Again, Dr. Acharya said, act for broader accommodation. Now, if you pick these two phrases, it looks like you're giving us space for accommodation. What will make you cut? If you move towards 2%, you will cut. When will you, what will be the conditions that will bring forth accommodation?
Yeah, I think what we are saying is that we have revised our inflation projections down, but if you look at our second half projections, we are still in the 3.5 to 4.5% range. So as Michael Patra pointed out, we need to see through the next couple of months for more data to see whether the inflation remains within these medium-term projections that we have, or whether it's a surprise even relative to these revised projections. And I think Governor stressed this as well. We have a combination of a big surprise in the inflation number as well as the CSO revisions, and we are just trying to get a finer grip on what's exactly happening in the economy over the next few months.
Thank you. Bloomberg Quint.
Sir, question on banking. You said that the internal committee had met or is due to meet, and you also said that the oversight committees are in place or are in the process of being put in place. What is the composition of these committees, particularly the internal advisory committee? Is this going to be RBI members? To what extent is the RBI staff going to be involved in taking these decisions of these large stressed accounts, whether they go to IBC or restructure under other means?
I think the press release we issued made it very clear that this committee will comprise majorly of our independent board directors. So it stays that way.
RBI staff.
And the oversight committee is actually already in place. I mean, it's just that more members are going to be added. So that, that it's not that the oversight committee is yet to be established. Though there is already a 2-member oversight committee, and more members will be added as the work has picked up and will continue to pick up.
But if it's the independent board
just one
members-
question at a time. One question at a time. Cogensis?
Thank you, sir. Bijoy from Cogensis here. Sir, the 5-1 vote, does it reflect not just differing views, but also the maturity of the MPC, the fact that it's been a few months and it's been a few meetings? So do you think that the MPC itself is coming to grips with the kind of role that it's been given and the data that is at its disposal? Also, if you could just throw some light on the SLR HTM calendar. You all have created again, there's a gap between the SLR HTM. If did you all consider issuing a new calendar because the old calendar has expired? So did you think it was too premature?
I request Mr. Vishwanathan to answer the second question, and I'll come back for the first one.
Thank you.
See, on the STM part, what we've said, in the past, we had said that the banks have to have only up to 25% of the investment portfolio as STM, but we had allowed them an exemption beyond the 25% provided the entire excess is on account of the SLR that they are maintaining. And as and when we brought down the SLR, we were also bringing that percentage down. This time we have taken a view that it is not necessary to bring down the STM, the amount of GSEC they can hold under STM. That's the stand we have taken.
On the configuration of the MPC vote, it strongly suggests that a wait and watch approach has been taken, and the diversity of the views that are in the MPC constitution has meant that we did have a vote that was not unanimous. So. Okay, I think that's fine. Thank you.
So very interesting conference there, a lot of questions that were raised and very interesting answers to those questions. But I want to start by the fact that there was a mention of the fact that the MPC chose to wait while they wanted a little more clarity on economic indicators. They wanted to get a grip on the changes that they're seeing in the GDP numbers, in the inflation numbers. So that's, I think, one of the more important points, something that we expected them to do.
Yeah, exactly. So it's clear that the RBI, also if you remember, if you saw what Deputy Governor Acharya had said, that eventually there is going to be a tilt towards accommodative stance. So somewhat of the RBI's change in stance in terms of at this point in time they're still neutral and they've maintained that. But what will happen in the future? Maybe they've revised down their inflation target, they've revised down their growth target. So maybe there is a possibility of moving towards an accommodative stance once again.
In fact, very clear point that he made on that inflation target is, yes, they've reduced their target for the first half, but the second half remains at 3.5 to 4.5%.
Exactly.
And if there is a surprise on that as well, perhaps that will really push them or nudge them towards being more accommodative.
Absolutely. Yeah. So, that's right, Alex. So another point, of course, something that we mentioned earlier before the policy came out was about the NPA issue, right? So we saw Deputy Governor Vishwanathan talk about it. The RBI has listed up a number of large accounts that they believe need some kind of handholding or restructuring of some form, and they're looking at options like the insolvency board as well as some other forms of restructuring. So this is something that we had reported actually earlier when the RBI's when the government's ordinance came out. At that point in time, we had said that the RBI may consider looking at some of the large accounts and focusing their resolution efforts into those large accounts,
and a timeline being put in place.
Absolutely.
Also the involvement of the rating agencies in the entire process of vetting a possible resolution mechanism.
Exactly. Something that Governor Acharya had pointed out some time back, that maybe rating agencies need to come in and start rating these large assets which can help in resolution. So things seem to be falling into place. The RBI is still not clear on what path they're going to choose, but at least there is some movement in that front, and maybe we can see a decision in a coming few days.
Absolutely. So let's actually take everybody through the highlights or the key highlights of this monetary policy review. First up, the key policy rate has remained unchanged, but there has been a reduction in SLR, so that should free up a little more space for banks to utilize funds towards lending.
Yeah.
We'll have to see how that lending actually pans out, but very interestingly, off policy, the reduction in the risk weight allotted to housing loans,
Yes.
that should actually give a very good impetus to lending in the housing segment, to the overall retail lending space. And there's also a few changes that have been brought on with regard to the masala bond issuance.
Exactly.
Now,
Some higher standards, maybe some tighter standards in terms of how one can issue these masala bonds.
and quite importantly, there's also a revision in the inflation guidance. The first half, the inflation guidance has been reduced. The second half has been maintained at 3.5 to 4.5%. Also, the GVA estimate for this financial year has actually been reduced by 10 basis points to 7.3%.
Exactly.
So very key points coming in from the RBI. I want to actually move to Agam, who's been very patiently waiting. He's been watching the market. What are you picking up? What's the movement been like?
So Alex, I'm not going to talk about the benchmark indices because we really haven't seen too much, but I want to bring to notice three stocks which have gained substantially. First one, we're keeping an eye on is PNB Housing Finance, that's up 6%. The other one is Canfin Homes, that's also up as much as nearly 5%. So these two stocks from the housing finance space, as the guys have already been talking about. And another stock standing out is Indiabulls Realty, that's also gained about as much as 4.6%. These are the three stocks which have seen a lot more movement once we've had the announcement, but other than that, when it comes to the markets, little has changed.
So it'll be actually very interesting to find out what the implications of this could be, because like we mentioned, Vishy, they've reduced the standard asset provisioning requirement to 0.25 from 0.5%. That should affect the pricing of the loans in the...
Not as much, but sure, there will be an impact on the pricing in terms of at least these loans will become more attractive to some of the lenders who are on the fence, at least for the housing sector.
And provide banks with an impetus to lend more in the housing space, perhaps.
Probably on the affordable housing, which is what the focus is going ahead.
And how it'll be interesting again to see whether the real estate segment, which has been in a bit of a fix, or should we say the demand hasn't really picked up in the real estate space on the residential side ever since demonetization happened.
Again, Alex, when it comes to the real estate stocks as well, we've seen a little bit of a gain on a year-to-date basis, but they're still to react, at least after today's RBI policy. Even when we had the RBI policy in April, we saw very little movement, but we're going to have to see a little more coming in from not just the RBI, but the banking sector as a whole, to see further developments in the realty space.
All right, so that brings us to an end of this very interesting coverage of RBI's second monetary policy review. Do stay tuned to Bloomberg Quint for a lot more insightful coverage of this policy, as well as the markets, which Agam will take you through in a very short while from now. Thank you for joining us on Bloomberg Quint.